Alright guys, welcome back to another video here on the Dividend Doggo Show on YouTube, and I am bringing you into the portfolio on M1 Finance to show you exactly what the week looked like for me. This is the weekly review. I'm going to go over the stocks that I purchased and what happened with the portfolio this week. So as you can see here, when I am looking at the overall view, we have gone back up over the 600,000 mark, which is absolutely fantastic. Most of that was driven by the gains. I did do a little deposit this week and did a little bit of stock purchasing, so I'm going to go kind of right into the weekly flow here. So as you can see, Monday we started off at $582,535. Now that is really low, and if you look at the jump between Monday to Tuesday, like this, the overall portfolio went down about $17,000 on Monday, and it closed the day at that point, and then it closed the day up at 590, 596, 598, then 603, and that's where we're at right now. So when you do see the market have these really red days, those are generally the days that you want to look at your portfolio and see what exactly is it that's down, and is there a reason for it, a good reason for it to be down, and should you even remotely be concerned about a fluctuation of 4 to 5% in the market. What I particularly like to do is I generally don't sell stocks based upon whether they're going up or down. I generally sell stocks because there's something fundamentally changed with the position, i.e. they cut the dividend, they took away the dividend or suspended it, or there's some other main reason the company's reporting me information, like they're selling assets and spinning off into another company. Things like that are the big things I want to be concerned with, not necessarily a 5% drop in the portfolio or in an individual position. So you also want to evaluate and see if maybe there's a reason you should buy on those days and buy a stock that you've had on your radar, and be on the lookout for what the deals are, because oftentimes, especially when you're in a market like we have right now today, where everything feels very overinflated, you want to look for the positions that might be a little bit lower or might get you just a little bit more value. Now, the drop like that is scary to watch. Like, that's a lot of money to watch vanish. A lot of people wish they had, $16,000, $17,000 in their portfolio at all. And to see that money just kind of vanish on paper, you just have to know that the market goes down and the market goes up. It's not always going to be a line and going to be level and even. It's going to sometimes have these large fluctuations. So looking at the weekly review, you can kind of see from the portfolio that we did have a couple sectors that stayed in the red, and those would be finance and those would be energy. So looking at that, is there really something that I should worry about when EPD is down 1%? Phillips 66 down 3%? I'm not really concerned about that. This position's only $500. That type of thing, it doesn't really worry me that much. I've seen the oil stocks go significantly lower than this last year, and you just hold and you keep buying what you want to buy. So going back and looking at this with finance, I do want to look at the fact that Bank of OZK was one that I've wanted to add a little bit more to. You can see it's one of the lower positions in the finance pie, so I wanted to raise that up a little bit, and they just had their dividend come back in, so that brings me into the buy. This was pretty significantly down. If you look at it on Monday, this was at 59,900, so almost $2,500 lower than what it ended the week at. You can see that here, and So I did want to have that bring me into the buy. I did do a purchase in the finance pie. I picked up a couple more shares of Hingham Institution for Savings, and I rolled the dividend in plus a little bit extra into Bank of OZK. Now, they did go in on the 20th, so that was, I believe, Tuesday. So that's pretty, like, I was like, well, if the market's going to keep going down, I may as well do a purchase. And I did that in the afternoon. So you can see the dividend came in for Bank of OZK at $75, and I added a little bit extra to it to up that purchase just to get a little bit more in the stock and add an extra like share and change. So that's pretty much all the buys. We did have the BST come in, so I will go and take a look at that for you. That added an additional 12 shares into the monthly dividend pie, and that puts BST up to 2,700 total in the position and 50 shares currently. You can see my cost basis. This is not updated. I don't believe this updated from them adding the shares, so this may just be a glitch where I just always know that I got those extra 12 shares at a much higher cost basis. So that's kind of what that is, but this is a monthly paying stock. It has a high expense ratio. I know a lot of people are uncomfortable with that, but overall I've been very happy with the return on this particular stock, and I wanted to take the opportunity when they gave us the rights to acquire some more shares. So overall, the entire theme of this week's video is really just buy things that you're not concerned with holding, especially during a downturn, assets that are going to keep producing through a global pandemic, through market uncertainty, things that you think are going to continue to pay you those dividends and raise those dividends. We had a lot of conversation and dialogue this week in the Joseph Carlson Discord about VST. VST is just kind of trucking along right now. As you can see, the position for me is I'm sitting at a cost basis at 1842, and the price is currently at 1910. So the dividend yield is going down as the stock price goes up, but our yield on cost is still above 3% on the yield. And we had some discussion about the dividend raise potential for next year. The fact that it's being ranked to a buy in multiple different brokerage analysts have come out with their buy rating for the stock. I do like the stock still at 19. Obviously, if you could have grabbed it at 15.85 or whatever the low was, just a couple months ago, it was real low here, as you can see from the quarterly. If you could have picked it up then, obviously you'd be doing better with it, but overall I still think it's a pretty decent pickup. I've been asked several times about it. Their cash flow report comes out, their quarterly report comes out, which I'm concerned about the cash flow, obviously, for the year, with Uri being a huge expense to them. We'll see kind of where that goes. But I'm pretty excited to get that report because I think it's going to be pretty good. I think the earnings will be pretty solid. The latest news about the advancement on the coal plant, like they're trying to move away from coal and go toward greener energies. So I look at this and I'm like, well, they're advancing it up, and it's a few years earlier. I'm not too worried about that. That's fine with me. Like, that was part of the plan, was to shut that one down anyway. So I'm hopeful that their cash flows will continue to be up, and that they will continue to be going solidly and be able to provide us with that hefty dividend raise going into 2022. The projected amount from the reports from 2020 were that they wanted to be somewhere around 76 cents. They're currently paying 60 cents per share. That's That's a pretty big jump. I mean, you're talking about more than 25% in a raise, like around 30%. I don't expect them to do that, but I do expect them to do maybe a 6 to 8 cent raise. That would be absolutely phenomenal to go up to about 68 cents, and then maybe by 2023 hit that 76 mark. And it really does depend on what the cash flow looks like going through and into next year. But if they reward the shareholders like that, that's a reward I'm here for. This is the Dividend Doggo show. This is what I want. I want that income raised up, and I hope that that's what you're taking away from it this week, is that you buy things that you think are going to return you value with capital gain appreciation, but also through the CAGR, the compound annual growth rate of the dividend. And they're going to keep giving you those raises to outpace inflation and continue to build up the portfolio. So thank you again for watching and tuning into this weekly video. I do want to mention a little update on Doggo. He was with the cancer specialist this week. He has started chemotherapy. The first round of all of the tests and medication costs around $5,000, so that's partially why you're seeing slightly smaller purchases in the portfolio right now, is because we are funneling our income that is left over after our expenses right now into the health and championing our dog, who is basically our child, and we love him very much. So I thank you all for all the well wishes, both in Discord and on YouTube here. I do really appreciate all of you, everyone who's liked, commented, subscribed, everyone who's watching these videos and staying through to the very end. I really do appreciate every single one of you, and I do want to remind everyone that the referral link is going to be in the video for M1 Finance. They're still doing that $50 promotion, so if you sign up and start your account with $100, they will give you $50 and give me $50, which is absolutely amazing. That's a great way to start out your investment journey. I will have a link to a sample portfolio as well as my current portfolio and the layout, so that if you wanted to copy that into your own pie, you could. I would not recommend that you invest in the companies at the prices that I have them here. But if you wanted to use the format, and then you could, change out the stocks and add to them individually as you see fit, you can copy that over into your portfolio. I will also have a starter recommendation, which is SPY-G and SCHD at about a 50-50 rate. This is very dependent on your age. The younger you are, I would say the more you should weight it toward going with a little bit heavier SPY-G. If you've got a longer period of time where you can leave that money invested there, that's the best way, in my opinion, to get your portfolio going and get a good basis. And then as you learn more about stocks, you can add individual positions that you can see value in and kind of go from there. So this has been Dividend Doggo signing out for 7/24 is today's date. I can't believe this month is almost over this week. So thank you very much for watching, and I appreciate every single one of you. Have a blessed day.